In this lecture, I want to talk about the types of ETFs. What we mean is you have your regular ETFs, which we saw, the SPDR, the FXI, and the XLF. These are all regular ETFs. You also have inverse ETFs. So, for example, SH is the opposite of the SPDR. So, if the SPDR reflects the S&P index, the SH reflects the opposite of that. It reflects the inverse of the SPDR. So if the SPDR goes up 1.5%, SH is going to go down 1.5%. So what is the advantage of an inverse ETF? Generally, in your retirement accounts like your 401k and IRA accounts, shorting may not be allowed. There are some types of accounts where you cannot short, and therefore, in the case of inverse ETFs, you're not shorting it, but you're just buying the regular ETF, SH, but SH itself is a short mechanism for the SPDR. You're getting the same effect of shorting. So many funds, many types of accounts where they're not allowed to short use inverse ETFs, and there are tons of inverse ETFs as well. There's pretty much an inverse ETF for most of the main larger ETFs, and so you can always use these inverse ETFs if you wanted to go the other direction, but if your account did not have the ability to short, this would be a great option. You also have something called a leveraged ETF. So for example, we saw that the XLF is the financials ETF. Now, FAS, which is FAS, that is 3 times the leverage of the XLF. So we're going to go take a look at both of these examples on the trading platform. If the XLF, if the financials go up 1%, then FAS is going to go up 3% that day. Similarly, you have leveraged ETFs on the downside as well. In the case of financials, it is FAZ, which is FAS. You would take advantage of a down move by buying FAS. Leveraged ETFs are great for short-term quick returns. What happens is they're not great for long-term holdings because these ETFs, the way they get the leverage is by use of some special instruments over a long term. So if you wanted to hold FAS for about 1 year, it may not be the right vehicle because it starts losing its tracking once you hold it for a longer period of time. But if you wanted to get in on a quick trade and get out in about 2 weeks, 3 weeks, 1 month, 2 months, that's perfectly fine. These leveraged ETFs give you a very good bump in your returns if you get the move in your direction. Now let's go to the platform and let me show you these examples of these ETFs there. So the first one we're going to look at is the SH, which is the opposite of the SPDR. So here you can see ProShares short S&P 500. So the leverage is 1:1. And so if you look at the SPDR, we went up 1.45% on the SPDR today. And if you look at the SH, we went down 1.63%. Now, obviously, it's not going to be exact the same, but you will see that over a period of time, both the SPDR and the SH, they're pretty much inversely correlated to each other. In fact, you can see the beta is minus 0.98. So if it was -1, it would be a perfect correlation. Obviously, you won't get a perfect correlation on any given day. However, over the long run, you'll get a perfect inverse correlation, And even this is very popular. You can see it traded 5.6 million shares today. So this is a 1:1, no leverage, inverse ETF of the S&P 500, which is the SPDR. Now, the other example I wanted to show was FAS. So let's first take a look at what XLF did, which is the financials. The XLF went up by about 1.57% today. So XLF is the select sector SPDR for financials. This is the financial services, which we also saw, which had all the Wells Fargo and JP Morgan and all of that. Now, what I want to show you is the leveraged ETF. So if you come and take a look at FAS, you will see that the FAS went up 4.12%. Okay, so the XLF went up 1.5% and the FAS went up 4.12. Again, not a perfect 3x, but that's what it is. And you can see the beta is 3.5. You won't find these numbers perfect on any given day. However, over the long run, it will be 3 times the financials. And similarly, now what I want to show you is the inverse ETF, FAZ, F-A-Z or F-A-Z. That's the fast, that's the inverse. So here, direction shares 3x bear ETF. So 3x bear ETF of the financials. And you can see that one is down today 4.31%. So for some reason, if you don't want to short, you feel that the financials are going to go down, you can buy the FAS. In this case, the FAS went down today because all the markets and the financials, the XLF is up about 1.5%. So you'll see here, this is going to be down about 4.3%. So hopefully that has given you a good idea of leveraged ETFs, inverse ETFs. You have leveraged and inverse for almost all kinds of ETFs. So what I want to do now, we didn't look at this site, etfdb.com, and I want to show you their database. It actually displays all the ETFs in a very nice way. And here what we're going to do is click on this, browse by ETFDB category. This gives you a fantastic view of all the different ETFs there are. Here you can see if you wanted to look at fixed income ETFs, there are very specific New York munis that the local governments issue. Then you have corporate bond ETFs, you have emerging market bonds. So this is all in fixed income, and you'll have all the bond market ETFs here. Then categorized ETFs as, commodities, currency. Obviously, equities are the largest one. And then you have countries like China and things like that. You also have some very unique ETFs. So this is a long short ETF. Let's go take a look at. That's interesting. So let's read the description of this ETF. The long short ETF may at times hold both long and short positions. So this is really great. This is very good flexibility. They're telling you that their charter itself allows them to go both long and short. And these ETFs can be market neutral as well. So they have a lot of flexibility, obviously. And so here are the list of all the long short ETFs, and looks like this one did very well. It's got a year to date of a performance of about 10.4%. So let's go take a look at this one, BTAL. Expense ratio is a little high because this is obviously an actively traded ETF, both on the long and the short side. Therefore, you will find that the expense ratio is generally a little higher. Asset class is alternative investments. ETF category is long short. So this is how you would come and do some research on whatever ETF. So let's say we are interested in a country ETF, and I look at the India ETFs quite a bit. So let's see if there is any specific ETFs in for India, and I'm sure there is. So top 11 India ETFs. So there's 11 ETFs just for India, and you'll find that for any major country, you're going to have a lot of ETFs that are targeted slightly differently. So here, the INDA is an index fund. So this is no different from the index fund, except this is an ETF and it trades on a daily basis, on an hourly basis. EPI, India earnings. So I guess this would target companies that have a lot of earnings. This is the Nifty 50 index. So let's go take a look at this one, INDY. It targets the Nifty 50. So the index that it targets is the S&P CNX Nifty index in India. This index measures the performance of 50 large cap Indian stocks. So it has all the 50 large cap Indian stocks. So similarly, you will have for various countries, you will have an emerging markets, which is basically all emerging markets, not just any one particular. So you'll have Russia, China, India, South Africa, Brazil, and all these different countries. It's actually a pretty big ETF. It's got an assets under management, $18 billion. Volume today was 42 million shares. So you can see that is a very, very liquid ETF. In fact, if you just wanted to get broad exposure to all the emerging markets, then this is what you would invest in. EM, one of the most popular ETFs in the world and one of the oldest products on the market. EEM can be used in a number of different ways. This ETF can be equally useful as a short-term trade to increase exposure to risky assets, because generally emerging markets are considered a bit risky, or as a core holding in a long-term buy and hold portfolio. So let's go see the holdings of the EEM. You'll see that it has Samsung, Taiwan Semiconductor, Tencent Holdings, China Mobile, China Construction, Naspers, China again, Alibaba, which is China again. This is also China, and this is also China. So, and then it'll tell you the sectors that it takes up. So financial services is the biggest sector that it's invested in. Technology is the next, and consumer cyclical, consumer defensive, and so on and so forth. So, and it also tells you, market cap breakdown, what kind of companies are there. So if you can look at this, you're looking at some of the best companies in Korea and Taiwan and China. There is also going to be lower down on the list. They'll have all the other emerging markets as well. And so here, if you look at Asia is 42%. Emerging Asia is 42%. Asia developed is 29%. That's probably Hong Kong and Japan. Latin America. So if we click on Latin America, that's 11%. If you see country breakdown, this is what I was talking about. China is 23%. Indonesia, 3%. South Korea 16%, Taiwan 12%, India 9%, South Africa 7%, Brazil 5%, Mexico 4%, and you have some others as well. Russia 4%, Malaysia 4%, other 14%. So it gives you a clear picture, very transparent, gives you a clear picture. What are the kinds of companies or sectors it's involved in? What are the countries it's involved in? And of course, you'll have all the performance and everything that you need to analyze. You'll have all of these over here as well. So for some purposes, the ETF DB is better. And then for other purposes, the ETF U is better. I wanted to also show you how these things break down, and so that if you had a specific ETF, let's say you wanted to invest in, I'm going to go for a really exotic one. So let's say I wanted to invest in Cambodia. Okay, so here ETFs with Cambodia exposure. Let's go take a look at that. There's only one, which is fine, and it's obviously a small cap, and I would assume that most companies in Cambodia would fall into what we categorize as a small or a micro cap. And so here we are. Volume is only 1,770. So you can see that it's obviously not a big ETF yet. And its asset under management is also very small. It's 20 million only. This ETF, particular ETF, has some exposure in Cambodia. So that's how you can target any country you want. If you wanted to do something in Vietnam, which is a pretty hot destination right now, you can get Vietnam ETFs as well. Here we have VNM. Let's take a look at volume, 475,000, not too bad at all, not too bad. Then you have the assets under management, 340 million, not too bad at all right there also. And it tracks the market vectors Vietnam index. So if you wanted to get an exposure to Vietnam, all you need to do is come here and buy the VNM just like you would buy a stock, or you can buy some options on them. There's various other things you can do, but basically this is how you can get exposure to any corner of the world by targeting some kind of ETF that is targeting that sector. So here what I'm going to do is just go back here and show one or two more things, because this is very interesting. Here you have all your leveraged ETFs. So here, leveraged bond ETFs, leveraged commodity, leveraged currency, leveraged equities. And so here, let's go to leveraged equities for just a second. As you can see, there's tons and tons of this. Your SSO is the 2x. It's a leveraged 2x of the S&P. SDS is just the opposite. It's the 2x short of the S&P. The volumes are pretty big. Average volume is about 5.6 million a day. Assets has $1.6 billion. So these are not small instruments at all. FAST, you can see, trades about 7 million a day. This is Nugget is the daily gold miners. Bull 3x. So it's a leveraged ETF. All these are leveraged ETFs. And so you can see that all these have a lot of volume. Almost all of the others are in the millions on a daily basis. Leveraged ETFs can give you a quick bump in return if you get the move in your direction. Most people use it for a shorter term. Now we're looking at Frontier Index. Check this out. This is really nice. These should be targeting all the frontier markets. So once again, emerging markets. And if you see assets under management is 408 million, not too bad. Volume is 611,000, not too bad. They target frontier markets. So the region is frontier markets. And what exactly is frontier markets? It's the next, if you recall the first section, it's the next one after the BRICS. So the BRICS are, everybody knows about the BRICS. Now, frontier markets are the big thing. So the frontier markets are basically your Indonesia, Vietnam, even Cambodia could fall into that. And so you have a very good way of targeting all the frontier markets in the world as well. So hopefully you've gotten a good idea that these ETFs can really target any sector, any industry, any currency, any commodity, any country, any corner of the emerging markets or developed markets, bond markets or equity markets. It's just so flexible, and there's so much you can do with ETFs, and they all track an index. So it's all diversified, automatic diversification. It shouldn't come as a big surprise that ETFs have become one of the most popular asset classes today in the financial markets. So now in the next lecture, want to take a look at some of the sectoral ETFs, and then we'll get into the core strategy that you can use right away. And I'll show you how to look at the entire market, the market cycles, and all of that in that strategy.